Hey guys, and welcome to another edition of Swinging Sunday Scan for February the 20th, 2022. Plan for today, we're going to go over the markets, look over some previous ideas, and we'll look at some new trade ideas. If any of this content helped you in any way, please do me a huge favor and smash that like button. Hit that subscribe button if you want to see more content like this in the future. Hit that bell if you want to get notifications anytime we upload new content. Last week, guys, we put out a video on Thursday on February the 10th where we put in this big topping tail. We basically highlighted two areas, one on the upper end of this range at 458, where we expected the market to push higher if we were to break above this area. The lower range was at 444, where if we were to break below this range, we were expecting a continuation to the downside. Last week, we also talked about possible double top here, which could be a sign of reversal to the downside. This big topping tail on Thursday, I took as a big sign of weakness, and we did see some weakness continue throughout the week. I was hoping for a gap down on Friday or potentially even Monday. We never got that. But we did see some pretty wide range red bars, again showing some sign of weakness. On the 15th and 16th, we did see some green bars and a bounce into the underside of the 200 period moving average as well as the 21 period moving average. But at the end of the week, we did see a continuation to the downside with some wide range red bars. Two things I wanted to point out here. One, this yellow line, which is the 200 period moving average, and this blue line here, which is the 21 period moving average, are crossing for the first time in a long time. Going back, the last time that they crossed was in June of 2020. I would not call this significant merely because these are two indicators crossing. I'm pointing this out because what this says when these two indicators are crossing is basically that the buyers are no longer holding up pace to keep increasing the price of the market. In other words, this is a pretty decent sign that the buyers are slowing down, or at least the possibility that the buyers are slowing down. And the second thing is we are now heading into an area where we could likely bounce, which is the 420 area. On January the 24th, we put in a pretty wide range bar with a very wide range tail bouncing exactly around this area. Essentially, going into next week, this is the area that I'm going to be watching to see what happens in the days to come. My plan with watching the markets is basically the market will likely bounce. It's just a matter of where and by how much. My current scenario, I have 4 open trades which are short and I have 1 long trade. What I'm hoping and expecting the market to do in the first couple days of next week will hopefully continue this momentum down towards that 420 area, and whether we slice through and continue lower or bounce in that area, my shorts hopefully will continue with that momentum. And the plan is basically to have some longs ready whether it bounces in the 420 area or not. If it continues through the 420 area, the longs will likely not trigger anyways, but I'd like to have them armed and ready just in case the market does bounce. We can get in those long trades and time a bounce with the market. What I've been talking about in previous episodes is basically the hope that the market will finally put in some kind of long-term bear market. The reason I hope for this to happen is I truly believe this will open up more opportunities both with swing trading and investing in some of my longer-term dividend portfolio stocks. What I really hope to happen is basically that we continue the momentum through the 420 area, that we bounce maybe closer to this more psychologically important number of this 400 whole number area. From there, what would be phenomenal, we bounce, retest the 420 area, and then continue lower again. This is not a prediction. This is just something that I really hope could happen. And basically, I'll be preparing for this kind of move. The QQQ looks basically the exact same thing. Nothing important to note here. Some previous ideas, WMS. I'm currently in this one short. This one is kind of just hanging about. I'm hoping with some continued momentum in the market that we might see some push lower. I'm currently in WELL. This one also shaping up nicely. Earnings is coming up, so I will be watching that closely. But with a continued move lower on the markets, this could push lower as well. Last week, I did mention the idea of UVV going long. I managed to get in this one, and this one is looking decent. We are around the 2-hour mark. This one definitely shows relative strength to the market. As the market has been going down, this has been putting in green days and has been creeping up. With a bounce around the 420 area, given the relative strength of this stock continues, this should have some momentum to the upside if the market bounces. RLYB is another trade that I called short. I'm currently in this one. Earnings is coming up, so I will likely be exiting this one soon. MCD, another trade I got in short. This one I got in midweek and didn't include in one of the Sunday scans, but this one is turning out great so far. A lot of these shorts with a bounce on the market, we could see a pullback on these and potentially put in pivots. I'm okay with that. Likely if that happens, I will be lowering my risk. The downside is we will be sitting in these stocks for a little bit longer and trying to be patient as possible. DRQ was another trade that we called last week long. This one was too close to earnings to get in. The hope was basically that this one could continue pulling back, possibly through earnings, and then we could look for an entry after earnings. But this one put in a significant bounce, and this one might be going without us. The bounce on this bar was so wide that the risk to reward got ruined pretty badly. So 2 strikes on this one. It was just not meant to be. A notable mention, T-Telus on the TSX. This was another earnings killer that prevented us from getting in this stock. I was looking at a breakout over the psychological number of $30 on this one. Again, I didn't get in it because it's so close to earnings, but wow, look at that. It nearly hit 3R already. It's pretty much in striking distance, easily 1 ATR to that target area. No regrets here, but that would have been a nice one to be in if earnings was not in the way. I have 4 new ideas for you guys. Just wanted to put in a quick disclosure. Many of these ideas, I have a estimated entry, stop, and target. These are never exact. They're merely a way of showing what these trade ideas could look like. All of the trades for myself are always dependent on certain criteria being met in the days to come in order to get into the trade or not. And then if the criteria are met, the exact entry, stop, and target are based on parameters which are related to the highs and lows of the daily candle bars and other parameters as well. Always stick to your own plan. If you don't have a plan, I suggest you get one fast. The first idea is Irmd. This one put in a pretty nasty reversal on earnings, but the reason why I like this one is while the market was going down for the most part in the last few days, this one was staying in a very tight range going sideways. This is an energy stock, which could be a possible safe haven for investors, while things like tech are going to probably put in some kind of big retrace or price correction over the next few months. With this one holding up as the market is going down, that is a sign of relative strength. So going back to my plan, if we do see a bounce on the market, this one could also see a bounce going along with the market. The pullback on this is not ideal in any way, but I will be watching this in the next few days. Next idea, NLOK. Something very much to like about this stock is they recently reported earnings and the volume has significantly increased on average since then. With that, we saw a big move higher. And when you see price movement along with volume, that typically shows as a sign of commitment to the buyers or the sellers. I am noticing a gap here in this stock on August the 11th, which is kind of a bummer. I really potentially should consider staying away from this stock as it has gapped in the past. But the smoothness of this retrace to this demand zone here is just looking really great. I may have to do some more assessment on this in order to get in, but I do like this very much as a candidate for a bounce if the market bounces as well. Next idea, Irmd. This is very similar to the last stock we just looked at. Recently reported earnings with a big push up with an increase in volume. The retrace, although looks okay, it is much choppier and the look of the stock is pretty ugly. I'll watch this one, but if I were to pick NLOK or Irmd, I would very much likely pick NLOK over this. Last idea of the day is AFL. This has been a strong stock pushing into all-time highs. We're recently pulling back with about a 50% retrace, heading into what was a resistance zone and is now becoming a support area. The risk to reward on this one is looking pretty decent. Again, following with the current plan, if we see a bounce in the market, this would be a decent trade to have armed and ready to enter if we see a bounce on the market. That's it for today, guys. Thank you so much for tuning in. If any of this content at all helped you in any way, please do me a huge favor, hit that like button. If you want to see more content like this in the future, please hit subscribe. If you click that bell, you'll get notifications anytime we upload new content. The market has been getting pretty exciting in the last couple weeks. I'm really hoping we see some continued downside momentum, which in my opinion should create lots of opportunities for more trades. Like always, guys, have a plan, trade safe, and be well. We'll catch you on the next one.